Hello, everyone. This is Brian Beamish back with you, the Rational Investor here, our website, therationalinvestor.co. We're in the CryptoLive room here. I thought I would do a nice little free video for you guys over on YouTube and Reddit and stuff. Hopefully, the information that I give you will help you on your trading day, and then also, of course, maybe a little plug for some upcoming programs that we have here. So, without further ado, you're more than welcome to pop on over to our website. The partner that I got together with back in the spring has put together such a beautiful site. Oh, Julian's done such a great job. And basically, we run different programs. We have, regular site membership that participate in our chat rooms and watch our member videos that we update, a couple times a week. And also, members have access to our trading models. We have different automated trading models and stuff that you probably hear me refer to through the course of this video and also elsewhere on the web. So lots of really, really cool content we're putting together on this website. So I thought I'd just take a few minutes, touch base with this audience, and just sort of give you a review of what we've been doing and what we sort of think is going to happen here going forward. For the trading community, the school that I run on our website, I've been following this, what we call the little old lady approach to Bitcoin trading, managing an extremely small account and very conservative trading. And really, you could argue this is basically the past 3.5 months. This was literally the entire past semester of our program, because we run the programs on a quarterly basis. So it's really cool is, basically new site members got to see a pivotal concept that we teach in our program called the optimal trade entry concept. First introduced to me by a gentleman by the name of Michael Huddleston. He runs the Inner Circle Trader website and service. So by all means, if you want to learn more about that, then feel free. But basically, the long and short of it here is that if you see how we have this initial burst higher here, right? So if there is any validity to this rally, and maybe we're in a bull market, who knows? Typically what institutions will do, they do not buy up here. They will say, all right, if this is a bull and we're going to play it, we will wait for the 61.8 to 78.6 retracement, which just so happens to be into the area where the institutions originally bottomed the market. We call this the institutional order block, or the IOB. That's another concept Mr. Huddleston gave to us, so thank you, Michael. But basically, if price falls down into there and then starts putting in some bullish action, number one, you have what's called a range trade strategy, right? Where you're just going to buy the bottom part of the range, and you're just going to simply look for a test of the top end of the range. So blindly buying in this area, that's one definite approach, range strategies. But you also notice that we had a pretty nice looking little double bottom come in here. And that's we've deemed that our Hollywood Nick trade strategy, and we always like to put little fighter jet icons whenever we see those. So these various icons that you see are all basically trade setups that we teach in our programs. And you can see that 3 different setups fired to go long here. You need to understand in trading, and we'll get to it in a bit, just because a setup comes in doesn't necessarily mean you're going to make money. Professional floor traders, when I was working with a prop firm out of Chicago, they were happy with 55% accuracy as long as, when they were right, they got paid twice as much as when they were wrong. And that's the key to this whole game. All right. Unfortunately, what I see happens here in the, in the community in general, and I was a broker for like 15, 20 years. So, I mean, this is nothing new to me. I've seen this 100 times. But basically, when a market gets really hot, you get a lot of sort of hot money that comes in. And then when a market dies down, right, you see a lot of those rats scurry back into their holes. And I kind of think that's what's happened with Bitcoin. and really you could argue, the broader stock market. I saw somebody did a service on Apple, trading Apple stock. And of course, when Apple was in a monster bull market, the viewership of the website went through the roof, right? And he was trading it long. And then when Apple's bull market died, and he was, still a long only guy, and he just kept buying breakouts, and they didn't work, and he started losing money, then, his viewership just died off. So, I mean, very typical of the broader market. I take a very different approach to trading. Very, very different, right? Again, our CME floor traders, they don't aspire. Want is not the right word. Aspire to be 100% right, right? When I run my web service here and I teach my school and my program, the number one thing that I try to impart on people is lose this obsession with being right. Professional floor trader right 55% of the time. I have a simple rule that I like my models, my Crye's 2 rules of investing when I was a broker. I like the notion of being right 66% of the time, which is 2/3. I see lots of people that, basically when they're right, they get paid, but when they're wrong, they don't take very big losses. They're right like 50, 60% of the time, and they're very profitable. But that means that you're going to take setups and they're not going to work. And anybody out there listening to this video, there's a big problem, right? There's people that want to be professional traders, right? And then there's people that just want to make money. I don't, don't lecture me on how to trade. Just, show me the actual trade location so I can ride your coattails and make money. And what they just don't understand is that professional traders often get stopped out of positions. That's something you just have to get used to. Such a hard concept for me to teach to people. So anyway, long and short of this, back to our sort of Bitcoin story here. We had a really nice range trade setup come in here, then a nice little momentum turn setup come in here, and it set up a really nice trade. And we actually booked some very respectable profits. Very well done. I was very, very pleased. Some people in our community made obscene amounts of money on this rally. Really, when it comes to reward, ideally, I want to make sure that it's 2-to-1. But there's also an adage that says that you should cut your losers and let your winners run. So maybe 2-to-1 might have been this level here, but if you could take a little bit of heat and just maybe move your stop to break even on some sort of free position, boom, this big rally here turned into some major bucks, right? And the interesting thing is, if we, just following the very simple principles that we teach in the course, this was actually not that unrealistic of a target, right? This is basically where I was selling up in here. So, fast forward a bit through the first part of the Q4 program, students were thinking I was a genius. Woo, Brian's so smart, way to go. And then you can see as time moved on, we came back and did another OTE setup, just like this one right here, where we came down into the OTE range. And basically, I teach my students, look at, if that setup is in your trading plan, you got to take it. It's just that simple. We also had a nice little Hollywood Nick double bottom come in here. But as you can see, and this trade fought, right? I mean, it actually rallied back up to a 38.2, which was interesting off of this range here. And in the course, of course, we teach 38.2 is what we call our first stop target. So it was interesting to see how we rallied up there, and then we failed, right? And basically I put the position on at the OTE right here. Then I added to it. I think, maybe I didn't add. I can't remember if I added or not. But anyway, long and short of it here is if it broke the bottom of this range, I got to get out. And that's exactly what it did, right? It broke the bottom of the range, and so I liquidated the position. As you can see, just between these two trades, right? I'm 50% accurate, but as you can see, this box is much bigger than this box. That's 50% accuracy, and I am a profitable trader. Following my trading plan had OT in it. I took the trade, got to live with the results, right? And the interesting thing is we actually did have some bullish market structure here with this breakout through this highway, this massive W here. And, I sort of joked with students and stuff that I guarantee you this failure, not only of this low, right, but then ultimately of this low, right in here, I guarantee you this broke a lot of bulls' hearts, right? This was just devastating for the bulls. And really, breaking this old historic low, if we start looking at things like the daily chart, and even the weekly for that matter. But if we look at the daily chart, right, there's that significant breakdown there. And, I like to teach in my course, let's just let the market tell us what it wants to do. There's that big market structure bottom, and bang, it broke it. Broke a lot of bulls' hearts. And you can see, on the break, they rallied it back, tried to recapture that level. And when they just couldn't recapture it, boom, the floor just fell out. And I mean, this is just an numerical look at the price. Look what happens if we change it to log scale, right? On a relative basis, basically the coin lost almost half its value in like just 2 or 3 days. So psychologically, a huge blow there. And then also too, on the daily chart, and I'm not quite sure why this isn't on here anymore. It should be. That we had a couple things that I thought were very interesting that happened here. So if we take a fib off of this key reversal low up to this all-time high, right? And I'm just going to eyeball this for time's sake. Let's try and keep this relatively short. Let's go the other way. All right. Yeah, I guess that's right. All right. So we have just a basic principle. There's the optimal trade entry zone. So if this was a bull, right, they would put a bottom in this zone. And I think they tried. You could see every time the price came down right here, in fact, we can extend this box all the way over. Let's just move that over, right from the all-time high. Excuse me. All right, there. All right. So we have a simple rule here that says that this 78.6 fib of this OTE zone is what we like to call the last sort of line in the sand, right? And you can clearly see, Dip Mountain Man got off a nice little setup there. Then we had this crazy one-day event, and everybody's like, oh, it's just an anomaly. Turns out, I guess it wasn't. Then we had another dip into Mountain Man's level at reverse. Then we had a nice serious dip into OTE sweet spot there. Then we had, you guys remember, this was the trade of the year. I made the video last May. I mean, it just looks like a drop in the bucket right now. This is a nice 30-40% capital gain long trade there. And then, we started the course. We had a bearish harmonic pattern start right off the bat. And sure enough, that harmonic pattern worked just brutally. Market structure wise too, we got lots of M's. I mean, our simple market structure notion goes like this. If you see M's, it means bearish. If you see W's, then it means bullish, right? Really, really simple stuff. And the easy way to remember this is we say, if you ever see the market smiling at you, it's getting ready to take your money away from you. Right? So we have this big M here, little bit of a W here, right? Coming out of here, things look positive, and then bang, we put in a nasty M right through here, right when I started the website last summer. Great timing, Brian. And all we did was just keep making more M's. Again, remember I said earlier we had a bit of a bullish market structure develop here. That's this action right through here. And then they just went and broke the bulls' hearts here, right? We've just made a new low here. We've lost the 78.6. When I look at on balance volume, it's still heading down. When I see MACD, it looks to me like it just broke to new lows here. There's nothing internally saying that this thing's bullish. I like to use this indicator called the Willie. It's just a modified Williams percentage R indicator. It was on that panic dump, and this is kind of interesting. On the panic dump there, it did actually get into what we call stupid condition, right? Where the moving average gets oversold. And you can see how the market's rallying away from these lows, right? And so we just simply say, if you ever see Willie stupid, especially things like on the daily chart or whatever, if it's stupid oversold, do not get sucked into the selling euphoria, right? You're just throwing your money away. And sure enough, you know, through all of this, and it's been just a nightmare here, right? The best thing, investors, if you missed the boat, you know, way back up at $500-600 last spring or last summer, right? If you missed the boat on the sell side, actually, I guess that was back here, way up here, right? Where Willie was stupidly overbought. And we got stupidly overbought here, right? So that's even $500, right? Now's not the time to be panicking and dumping your holdings when the market's stupidly oversold. And sure enough, even from these panic lows, we've rallied a good, you know, what, $60-70. So looking at it from a bigger perspective, you know, there's still a lot of pain here, right? Market structure wise, you know, we're nowhere near a bottom. I thought it was interesting. I'll just sort of finish off this summary. If we look at actually like who actually owns these coins and where do they own them from them, this graphic that you see on the right hand side of the screen is a really helpful tool. It's called the volume profile. And basically you can see that by far, even all this nonsense, all the way up to $1,000, right? You can see where the institutions and the smart money, or the whales as they call them in Bitcoin land, right? You can see where they're long. I mean, they're basically long from about $75 a coin, right? And that was all this distribution through here, that big run up to 250, and then the pullback all the way back down to like $50. And then that massive consolidation over, you know, almost what is that? It's about 6-8 months of time. You know, that's where the smart money, or the whales, or whatever you want to call them, and TradingView is really handy. They put this red line on here, so it's really handy. But that's basically where they're long. So they shot the price up, and you can see as they shot. In fact, if we look at the profile from when it happened, say right there, you can see as price was moving up here, there's nobody buying, nobody at all, right? It's paltry. And so all they've done is just taken the past year and slowly distributed all of those coins that were bought in here, right? They've slowly distributed them to the public all the way up through here. They're just slowly filling in this profile. And what usually happens with these profiles is you get these sort of these holes. Do you see how there's like a hole in the chart here? Let's just go like this. All right, let's move this over. All right, so can you see how there's a big hole in the chart here? Right? So they did a bunch of volume, and you can see the back and forth, right? Back and forth. That's what gets people, you know, long from that level, or short, right? So they did a bunch of volume up there. And you can see, and, you know, just even a week or two ago, this was not nearly as full. This was just all a big cavern. And so you can literally see how they're filling in the profile. So something that's really handy for you, if you want to just take something away from this, is that this is what's called the POC, or point of control. And markets, not always, I'm not going to say always, nothing's ever always in the market, but markets, especially if they zip up to areas where there just isn't that much volume traded, they will want to work their way back to the ultimate point of control. And in Bitcoin's case, it still looks to me to be about 100, 125 bucks, somewhere in there. So, you know, it sucks. You know, it's kind of a funny commentary. I have a lot of people that are cross at me, if you will, because I wasn't, you know, running an aggressive shorting strategy. You know, through my videos and my publications and stuff, you know, especially last summer, I was very, very cautious, and basically turned negative of Bitcoin right up and through here, and all our posts here through the summer and through the fall were, yep, Bitcoin's in a bear. It's a big ugly mess. Nothing really to do. And I have been playing the market on the long side. Like I said, if we look at the 6-hour chart of BTCE, and the only reason why I'm on BTCE, people are probably asking, why the heck is he on BTCE? Is because I have this silly little PAM account. We didn't start this program with a heck of a lot of capital, so we just put a couple $100 into the PAM account, and that's what I use. I just manage that. We call it the little old lady strategy, where basically I just take trades and I manage that $200 as if it was like grandma's last $200, and we're going to manage it extremely conservatively. So, like I bought like a whopping, I think I was long like a third of a coin here, right? And I sold 2/3 of the coin. Here I bought like 0.12 of a coin, right? And I got stopped out, right? I took another little stab, hoping that these lows, this was just a stop flush and we would turn. But I bought an extremely, well, actually, I bought about the same size purchase, but I just took a very, very, very small amount of risk on the trade, right? If we zoom this in here, right? We had the breakdown, got stopped out. I was like, all right, well, let's see how she acts in here. We had a little OTE. We came right up to the trend line, looked like she was going to go. And so I picked some up at the OTE sweet spot and said, if it breaks the lows, I'm gone. So sure enough, boom, broke the lows, out of here, right? Then we had another little one. You can see I'm taking extremely small amounts of risks on this. At this point, with the bearish higher time frame structure, there's no reason for us to be going full tilt long on this, right? These are just little probes. I like to call them my little nibble strategy, right? Where, if we bought the OTE and it put in a double bottom and it started to break out, well, then we can always add to the trade, right? But I like to take a little nibble at the OTE sweet spot, see if this is a range or not. If it breaks the range, just get the heck out. So I've had to do that a couple times, but you can see that these losses are extremely small in comparison to our nice big fat gainer, right? Let your winners run and cut your losers quickly, right? So we'd had another little nibble here, and I just sort of bringing it up to the YouTube community. I do lots of videos and posts. If you guys want, I highly encourage you to follow my Twitter feed. If I go here. So if you follow my Twitter feed, you can basically see me as I'm trading away in the market, and then a lot of the links that I'll give will just directly feed you into the gold members page. So I recommend that you follow me on Twitter. It's not a bad idea. But basically, we had another long setup come in, right? Excuse me. Let's see, how do I describe this? I'll go over here. All right, so we had, if we look at the hourly chart, here's the big dump, right? All the way down to 160 and change. Then the dead cat bounce, rallied to 227, and then basically we went sideways for like 66 hours. I mean, that's forever in market land. And what I noticed through this, I mean, I really wasn't going to take a trade in here, especially V bottom. I wanted to see these lows tested. So they brought it back down, then they brought it down again, then they brought it down again. And really, the market just didn't have really a heck of a lot of interest trading below $200 in earnest. And, while it doesn't show on this chart, if you look at volume, we see volume here just basically dried up. It just disappeared. So just the slightest bit of any sort of bullishness, and whoo, away we go. So we got a bit of a dead cat bounce rally here off of this lower move. You can see that we had nice bullish momentum divergence, and of course our good old momentum indicator Willie was officially stupid. So put it all together, not bad to think about hunting longs. I wasn't quite ready to pull the trigger here just because this was a V bottom and I wasn't quite sure how this was going to act. So I just want to let it quiet down a little bit. And sure enough, it just kept going sideways. And we just have a simple rule that the longer the channel, the bigger the run. So as this channel just kept progressing and progressing, you know, basically I'm just sitting here licking my chops going, holy crap, this is going to be a big move whenever it goes. Through this, right, bang, 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 we also, and this is what we call, if we look at the 6-hour chart right here, we call this was a big bot setup here, right? You could argue this is basically a bull ABCD pattern. And that's what the bot basically just trades off of. So AB, right? And we clone that, CD, right? Up into that target. That's painting a target at 250 bucks. Really, that's not really that outlandish, right? If we look at higher time frame structure, we see that there's the last significant fail. And so I often talk to people that, you know, if institutions did want to get short, you can imagine they just have a ton of open orders sitting to sell right at this level right here. They didn't sell this part, right? Because institutions do not sell down markets, they sell up markets. They're probably going to engineer a rally it right up into this level, bull ABCD target, old historical support, horizontal support and resistance, right? Here comes 200 SMA, I'll put it all together, right? And they'll be selling into that rally. Right? So again, if we go back to our lower time frame, that's sort of that bigger picture. And then within the bigger picture, we also had a smaller little bot setup. And this little bot setup basically implied that we were going to test this high here. Right? And, you know, those that have taken my course understand that we could probably make an argument that institutional order blocks up and through here, and institutional order blocks through here. So if you're looking for resistance, this is the area you should be starting to hunt. So look where that is, right? You know, coming through this consolidation, and I really like this, man, more of this consolidated. We had this bot set up, we had the bigger bot set up, and so I was like, I got to get in here. So I bought, and you know, I was tweeting. If you, I don't know whether you can see this or not, but we'll give it a shot. Let's see what comes here. No, that's that one. I thought I tweeted this. Anyway, here's the trade. You can see the trade as it was developing, right? Where basically I had 3 serious lows to risk against. This was a bot setup, and I got so jazzed by this trade that when we broke out through, I think it was this high here, I was just like, well, I mean, this thing is going up. I might as well just add to the position. You know, that is a bit dangerous, and I don't really like to encourage people to do that, unless, of course, you know, you really sort of, you know, you're comfortable with what you're doing. Here is sort of a screenshot of the end result. So, you know, that last one was just price in here. As the screenshot says, and this is the BTC PAM on the MT4. This is the actual account that I'm trading here. So we had 3 reasons to take trade: bot setup, wide double bottom, bullish engulfing pattern here off of, this is a 15-minute chart off of the half-hour and hourlies. This was a bull engulfing here. So I was a buyer, and then I added more, and boom, up she went. What was really interesting about this rally is that you can see that we actually hit the bull ABCD target here, 227, and we actually exceeded that. We started going beyond it. And so when I saw that, and then I saw that this high in momentum is lower than this high, right, even though price is higher, and our old buddy Willie is now no longer stupidly oversold, but actually threatening to get stupidly overbought. So on this sort of blast higher here, I was just like, you know what? Why be greedy? We've already hit our initial target. We tested the old highs. On the initial purchase, we're sitting on a wicked 2-to-1 profit. even with the add that I did on the breakout here, we're still sitting on about a 1.65, 1.7 risk reward ratio. Why not just book the profit? Right? I mean, the trading plan worked, everything was fine, so that's basically what I did. And that was this image here. So you can see how the market rallied up, sort of waffled a bit, then rallied up and went test a high. So that was going to be a double top there. So I just moved the stop up underneath that pullback low, which on this case was 231, somewhere in that neighborhood. And boom, you can see I was stopped out, right? 230.23, beg your pardon, right there. So what am I doing? So nice trade. I mean, it's a really respectable trade. And again, this is stuff that we teach in the course. Really, this should not have been come as a big surprise to anybody. I mean, this was actually a fairly well telegraphed trade, especially after consolidating for 66 hours and lots of sort of internal anecdotal evidence that this thing wanted to move higher. So what do we do now? All right, and Julian's always asked me, Brian, don't concentrate on what you did, concentrate on what you're going to do and what we're looking for going forward. Here's a nice screenshot of an algorithm that I built for my 1980s stock site. I don't know whether anybody watching this video remember, but I used to run this algorithm on the entire stock site. And this on the entire stock market, and this is my 1980s coding. Through the help of a number of people on the site and site members and TradingView and stuff, we have been able to at least migrate the algo over to TradingView. And what's really cool is one of the site members has actually got the cumulative index, and that's the real DI, where we measure multiple time frames and combine them together. On TradingView right now, we just have the individual time frames. And so what I'm seeing here, right, and you'll notice that this breakout here, the buy signal came like quite a while ago, right? Back here, you see that right there, right? That was that reversal there, right? Buy signal. As soon as we got 3 thumbs up, this guy, the 4-hour actually turned up way back here. But you notice that the 2-hour was really humming and hawing, right? And all through this consolidation, the 2-hour was just sort of like, I don't know. I'm bearish. Soon as we got 3 thumbs up on the DI indicator across all 3 of these time frames, look what happened. Boom! Wicked rally. So again, this is sort of value added that we have on the website here. We've got the cumulative, and there was the cumulative buy signal. That was that there. And you can see that the cumulative actually rolled over last night. So it looks like my little exit strategy wasn't such a bad idea, right? On the individuals, they haven't quite rolled over yet, but let's call a spade a spade. I mean, this is getting awfully, tight in here. And if we get any, can you guys see the double top that's trying to form here? If we get a trade back below this 223, that'll be a confirmed double top, and trend might be over. If we get these 1 hour to roll back over into negative, then I certainly am not going to even be thinking about buying this market. And really, my attitude right now is I don't think I really want to. I do appreciate that off the higher time frames, we're probably going to work our way up to 250 or so. But here we are at 230, right? So maybe there's 20, 30 bucks of potential reward. At the same time, the stop on this trade, right, at 230 is still, I mean, really, I guess you'd have to have it down in here. According to the bot rules, we've had stop to break even level hit. So if we come back to 208, 209, according to this, you should be stopped out and walk away from the trade. It hasn't hit its target, and it's just sort of sitting right in the middle of the road right now. And, considering too, like we said, we have 2 bots here, one bigger one, right, and then one smaller one, and you can see how we're just fighting right at the smaller one's target right there, these old highs. Frankly, I don't know how this is going to turn out. I don't think anybody does. You know, I wouldn't be surprised if we do work our way up to this 250, 260 area here. I myself would like to see this thing pull back, right? I certainly can't justify buying into a Willie that looks like that or a MACD that looks like that. That looks horrific. So right now, at best, we just got to let this thing settle down and clean itself up. And really, if I was going to start painting targets for where this thing should come back down to, you know, if I just do simple retracements, you can see 38.2 is what we call our first stop target. And then usually markets like to retrace to this level, and then how they act off of this level will tell you just sort of the health of the general market. So I'm looking for a move back to this 207 area. That totally wouldn't be out of the surprise, and that's basically where I originally went long. If that fails, then really we have to start thinking OTE, right? Which is our range strategy, and basically thinking, okay, maybe this low does have to be tested. Let's see how it acts around 183. Right? Couple things I'll just mention in closing here. This is the bar low. So the bar low, the bar that made the lowest low plus the preceding bar, that's our institutional order block. So the top of the block just so happens to be sitting right at the OTE sweet spot. So my hunch is, I wouldn't be surprised if we have to come back down to sub 200 here. If we're lucky, and this really is a bull, it's going to test these levels. And really, I would argue if this is still a bull, it's going to test 38.2, put in a nice double bottom, and away we go. If this is Super Bowl, and I doubt I'll be playing it, but if it is, it's just going to turn here and head straight up to 250. You see this sort of shooting star doji kind of idea up here, right? What a coincidence. Maybe there's a bunch of stops sitting just above that high. That high just happens to be 255. What a coincidence, right? That happens to line up with that, 258. So going forward, kind of on the fence right now. Took some nice profits. I'm really proud of myself. Followed the trading plan. Took profits. Counts going up. Feeling good. You know me, I'm not really that big of a fan of shorting. I suppose, you know, if we started, you know, we could actually make the argument bear momentum divergence, really stupid. If we get a double top in here, really, you know, I don't have a problem with people shooting for OTEs on the downside, right? I mean, if we look at the risk rewards of taking the double top, risking against the highs, and shooting for 50%, right? This is classic Hollywood Nick. That's 2.21. There's nothing wrong with that strategy at all, in my opinion. Just what you have to understand, and this is so important, people. If you want to be a professional trader, and I'm not saying you do, right? This is a tough, tough life. Basically, we are paid to worry. That's our job. We worry, right? But if you want to be a professional trader, then you have to set yourself up so that being 100% right is not the main focus, because no one's 100% right. What you want to focus on is taking setups, making sure that your behavior is extremely consistent so you can measure your performance, and then just rinse and repeat. When you're right, make sure that you get paid more than when you're wrong. It's just as simple as that, people. And if you follow that premise, you can be wrong up to like 50% of the time. You know, the CME boys, they used to get a little cross at us when our accuracy dropped below 55%. But 55%, think about that. That's being wrong 45% of the time. When you're right, you get paid, ideally for me, twice as much as when you're wrong. If you do that, right, and you just consistently follow the same setups day in, day out, you will see the results. You know, it's interesting. We're running a Forex model now here with Shane. You guys have probably heard me talk about the Shane chain in the past. Now we have this thing called the brain chain. We haven't done any trades here of late, but we've had just a whole bunch of FOMC, well, not FOMC, ECB, BOC, Bank of England. I mean, a whole bunch of different central banks acting here this week. So that's a cue for us to just stay on the sidelines right for now. But the point here is Shane has mathematically proven, and so did the ICT guy, that you could be right, like say 60% of the time, and as long as you focus on that 2-to-1 risk reward, you can make a lot of money. And Shane, one of my star students, is basically just doing that now, and we're just going to run this portfolio demonstration for members just so you can actually see what it looks like. So all right, why don't I leave the video at that? I think you have a pretty good idea what I've been doing recently. I mean, just a phenomenal little trade we had here. Very happy with the performance. If you want to learn how to trade like this, that's basically what my goal is for students in my courses. Where you've got the upcoming Q1 program starting here very shortly. So if you are interested in, trying to learn about things about how professionals act in the market, risk reward, setting yourself up for success, understanding the broader context of our economy and demographic trends, if you want to learn how to build setups, what are the tools that I use, the various different indicators and tools. Basically, as you can see here, it's just a week-by-week process where we just bang through all this information. And by the end of it, you're empowered with some incredible tools. I'll just leave it at that. It's the course is basically 3 months in duration. I charge $150 a month. And my basic guarantee is that you leave the program, if you basically do everything that I ask, you're going to leave the program with a very good understanding of how the capital markets work, with a trading plan that reflects you and the person that you are and where you're going, and actually working setups, right? And understanding, appropriate risk reward philosophies, risk management, all that. All right, so why don't we leave the video at that? I hope you guys enjoyed it. You have a pretty good idea of where I think the market's going to. And I'd love to see you guys on our website. Have a great day, everybody. If you want to just say this in closing, tradingview.com is a site that I get a lot of my charts from. They do have trading chat rooms. I do have a chat room here at TradingView. Let's see if I can do this. Oh, that didn't work. How about this? I don't know if that worked or not. I don't know whether you guys can see that or not. Can I put that up there? What happens if I do that? There we go. They have these various chat rooms that are open. And this is our chat room, our Rational Investor School for Bitcoin Trader Development Lounge. So if you do want to come in, and you can see the address right there, you can come to our website, right? And I don't know whether you can get access to it from our website, because it's in behind the paywall. My advice is, if you want to go that route, go over to TradingView and just basically search this this chat room. I think that's it. No, that's not the right one. There, that one. And pop into our free chat room. You're more than welcome to ask me any questions that you want, and maybe we'll give you like a free trial subscription to the site, so you can come and see what it's like to chat with traders basically on a daily basis. So, all right, everybody, have a great day. All the best. Any questions, feel free to give me a private message or whatever, and have yourselves a great day. Bye for now.